Mallincourt Publications up 5. You've got Intercontinental Exchange, the ICE, that's up $3.75. To the downside, Qualys, that's off 28%. That stock chart looks basically horrible. Ani Pharmaceuticals, that's off $7, down 13%. Nation Star Mortgage down about $6. Baidu off 5. Trans Digim Group, TDG, that's off $5 as well. So we got plenty to go ahead and look at. But first, let's start taking a look at what's going on now. I've got a question here inside the Tigers Den. And I'll tell you what we'll do. It's with regard to my thoughts on the Bradley turn dates out here. So during the break, I'll go ahead and I'll create a chart that I can post on the screen, and we'll come back and we'll take a look at that. So in the meantime, let's go take a look at what's going on the NASDAQ 30-minute chart out here. Let's go take a look at the pattern that is in play as we speak right now. Now, in the case of the NASDAQ, coming off of the lows out here, the lows that I'm referring to, let me get my crosshair out here. The lows I'm referring to are 2:30 in the afternoon, and this was last Thursday, I believe it was. Last Thursday, as the market was moving lower, we saw the NASDAQ get down to a price point of 43.8650. Now, at the same time that was happening, I'm going to switch over. We're going to go. Let me do this here. We'll come back to this chart in a moment. I want to show you what was going on at the low, and just utilizing a couple of different chart patterns out here. 2 different 30-minute charts. We're using here is the same. Here is the ES Mini when it was making that low at 2:30 in the afternoon. Actually, 3:30 in the afternoon. 15:30. 16, yeah, 3:30 in the afternoon inside the ES Mini when it was making its low. So as the market was moving lower, this is last Thursday, it was moving lower with one of Stevie's favorite patterns because it's a psychological pattern, right? It's an emotional pattern. It's where the markets are moving lower with emotion price-wise, but are not moving with the same kind of emotion intensity from a relative weakness standpoint. The weakness was, it was actually getting, how do I say this? The weakness was getting weaker. It didn't have the same type of vigor to push prices down. And then the sign painters out there, the bulls and the bears, the folks that go to work, their only responsibility for you and I as far as technical traders is to go ahead and paint the sign. In this case here, they painted that sign. It was a bullish engulfing candle. We saw the market go ahead and take off from that level. Never completed a really A to B equals CD that I could really draw out here for you. I'd be stretched to really draw a decent on a 30-minute chart an A to B equals CD pattern. Now that's what was going on there. Makes a high yesterday, but now we're going to come back to what it's been a stronger index, stronger futures contract, which is the Nasdaq. So the Nasdaq here yesterday, this morning, 5 o'clock this morning, as it was making. So yesterday, same thing. If you in this case here, coming off of the low that it formed, but yesterday at 1 o'clock in the let me check here, May the 5th. No, this morning at 1 o'clock. Coming off that same low, if we take a look at your 7th inning stretch candle out there, sponsored to us by none other than Basil Chapman, makes that move to the upside, does that here at 1 a.m. Now, as it was doing that, we were seeing that same price relative strength divergent pattern, one of Stevie's favorite patterns. You put this together with what took place at 1 o'clock, and you're like, hey, that's a great shortable position. Well, the reality is that pattern failed. That G count, okay, that 7th inning stretch pattern, that failed at exactly, between 4 and 4:30 this morning out here when the markets just simply moved higher out there. But nonetheless, we recycle our counts. We get up here to what could be a fourth wave. Markets can break down between 4 and 7, right? And we still have Stevie's favorite pattern that's in play. The markets were moving higher and doing it with less relative strength out there. And we had a nice little dark cloud cover candle and a little bit of confirmation that very next session. So now we know we've got at least a decent short-term top that is in place. And as far as the market is concerned on a 30-minute chart out here, it's not done to the downside. It's only done 3 waves to the downside. We ought to at least get 4. That says that maybe that 4th wave would come during a Basel show, maybe not. Just depends on the continuation of price and the way that it moves out there. But if we just take a look at 2 30-minute charts to get our reads with regard to patterns that are in play out here, especially because we learn a lot from strength, and so we're taking a look at the ES Mini and the Nasdaq, because what both you and I know with regard to these two futures contracts is that they're both trying to break out of long-term, larger-term consolidations. In the case of the ES Mini, it's a consolidating pattern from 2003 2,033 to 2109. So you and I have got to be paying close attention. It's up against resistance. Can it break through here? We're looking for signals that it can break through, because if it does, it becomes a nice trade. It's a nice 75 points inside the ES mini to the upside. You would want to be in on that type of action. Likewise, if it can't, you might want to be in the action to the downside, because it could be as much as 75 points to the downside. Until you break the consolidation, you just simply have nice trading patterns that are going on, intraday trading patterns that are going on. And inside of the NASDAQ, we know that it had already broken through once through its consolidation level, and then that was a false breakout, and it still is a false breakout as we speak here today. And that says that likely the NASDAQ, when we take a look at the 30-minute chart, the signal it gave both you and I, and this says here that price inside the NQ ought to move down to 43.70 and or 42.70 down to the bottom of that consolidation area. Now, I show you these patterns here that we're taking a look at, and one could say, hey, it's always easy to take a look at a stock chart after things have happened. The things that I'm showing you are things that actually led to my clients and I getting into a trade this morning, and it wasn't to the long side out there either. I don't want to jinx a trade. I can't jinx a trade. I wish I could control the markets out here. I can only control what it is that we do inside the markets. And really, it's all about emotion. I just showed you some tools here that basically they read the emotion of the markets. It's all about trading emotion, period. Lock, stock, and barrel. That's what I'm going to be doing on this coming Thursday, which is really teaching you about the emotional control and decision-making process that each of us use for everything in life out there. We'll apply it to trading, but we'll apply it to life as well, because these will be a set of tools that I share with you that you'll be able to take with you forever. And it's it's like invisible forces. They're things that are in front of us all the time. Sometimes we just don't see it, and we just need somebody to help guide us to be able to see and understand why we're doing the things that we do. It's not really what you think out there. So join me this coming Thursday. 3 easy ways to do it. I mean, super easy ways to do it. Pony up $97. That's nothing compared to the material that I'm going to provide to you. Secondly, become a newsletter subscriber. If you've never tried Mastering Probability, come on over to the homepage at TFNN.com. It's an easy thing to do. Get access for 30 days to the newsletter service. You'll get into that workshop. And if you're already a subscriber, you don't have to do anything. You're already in Lake Flint. So that's what's going on inside of the markets on the time period basis out there. We took a look at the daily. We took a look at the 30-minute charts. Now, let's go take a look at what's going on inside of a couple of the ETF structures. Let's go take a look at the QQQ ETF series. What do we know about it? Let me get rid of these retracement levels out here. What we know about the Qs is that they're continuing to trade inside of their TAS market profiles. Yesterday, getting up to that comfort level with light volume, 23 million shares with light volume, getting up to that comfort level of its TAS market profile, point of control. Now, Qs nothing's fallen apart here just yet. The question inside the Tiger's Den was dealing with a couple of dates, or dealing with a date specific. When we come back from the break here, I'll give you a couple of dates, and we try to time things together to figure out what the markets are doing out here. Right now, it looks to me like the Qs are going to try to move down and test the 106.11. Maybe they come back and they test the March 26 area before they release any piece of information to us in the 105.70 to the 104.24 area. That's what's going on inside the QQQ ETF. Inside the IWM here, real quickly, you got the IWM. It's moving back into its swing point from March 10th. That had 32 million shares. That was tested with 72 million shares. That was signaling to you and I that it was going to go test that area once again. It was moving into a swing point with volume. So you should expect the price level of 119.83 to 120.70 to be tested inside of the IWM. We'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this two-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 25. S&P is down 7. Composites off 40 points. We're going to go out to our city of brotherly love, to a brother that we love. That is John from Philly. John, how you doing this morning?
Yeah, you know what, Steve? Good morning to you. You need to send some of that brotherly love up here to Philadelphia. I would hope the citizenry up here doesn't catch the flu that's going on around the city of Baltimore. So send some of that up, please.
You get all the white light from all the tigers and tigresses here at TFNN.
Excellent.
Yeah, you bet.
Steve, I would like to get some thoughts and some feedback from you on the NASDAQ composites. Could I first run off 4 facts for you that paint a picture?
Yeah.
Steve, fact 1. Strangely enough, CNBC opens a San Francisco studio. They open it on Monday, April 27th, the day that Apple's going to announce earnings after the market closes.
Yes.
On that day, the NASDAQ Composite makes a high for the day at 5,119 and change, at 5,119.
Yeah.
It makes it just a mere 13 points shy of the high, the record high set back in 2000 in the first half.
Yes.
Thereafter, there's a sell-off of some sort. A bounce occurs into a high yesterday. The high at 5,043 on the bounce was, to the penny, a 61.8% retracement.
Yep.
Then there is a turn down, a little selling this morning, nothing big, but a little selling. And in looking at that hourly chart on the composite, just between Friday and Monday and today's open, there's a little island left there. So you throw all these things together. Question, is there a reason to speculate, given those facts and things you look at, Steve? Are there reasons to speculate the NASDAQ Composite has made something more than a tradable top, perhaps a very important top?
Okay, so it's a great question. Let's add a couple. Let's add. So you've got the CNBC San Francisco high. They say, okay, maybe that's an indication of a market top. The 0.618 retracement. Let's focus on the 0.618 retracement from yesterday, because as each of us know, we take a look at B2C legs that are forming. What John's describing is the potential for a B2C leg. And if you're looking for target areas to take that trade, that would be one of the price levels. So if we've got that, then we will see the lows from last Thursday get taken out, and that would set up an A to B equals CD down that takes us to the 48, 45, 47, 91 level. So that's what John is looking at. And so to add to the conclusion that is a likely pattern to unfold, I would say you come over and just take a look at the summation index for the NASDAQ Composite, since we're talking about the composite. And when I put that chart up on my screen here, what we can see is that its price oscillator is below zero. It's been below zero since the day before, actually. The price oscillator turned, no, I take it back. It turned that same day, that April 27th. And whenever the price oscillator gets below zero, the summation index for the NASDAQ turns down. And sometimes that can be a little bit of a lagging indicator. In this case here, it's really the same day that high was made. And that was telling us that the sellers were in control of the marketplace here. Sellers are in control right now. And so that's a very viable pattern. I would say that the way that the NASDAQ behavior is in place, and the answer is this something larger than just a tradable pattern, you and I will know that if, in fact, your A to B equals CD pattern comes to fruition, and if the price oscillator gets down to like about the minus 70 area, minus 67. Because in the past, I'm talking including the Ebola scare back in October of 2014, it's at that level where we see either bounces or we see significant bottoms that would form out here. And so we'll have to see what happens when and if the NASDAQ gets down to that level. I would also throw out from a pattern standpoint that yesterday, I'll switch charts out here, something for you to look at. You may be aware of this, you may not be aware of this, but if we take a look at the VIX index, the volatility index, yesterday gave a real nice signal that we had to be on guard out here. So here's, so we've added number 5 for you, which was the price oscillator still being below zero. Number 6 is that yesterday, if we take a look at our Chapman Wave counts, and you and I, Saratoga Bob, we've fallen passionately in love with that G count to the downside. And if we take a look at,
if you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here. as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. My apologies for running over right into that break. Was not paying attention to the clock. My apology to you, John, as well. I was trying to show you the VIX chart out here. So the VIX chart, what it actually did yesterday when it was making that low, it pierced through the prior low out there and actually gave us that seventh wave count to the downside. And what it was also doing, it was really going against support of the trading sessions from April 23rd, 24th, and 27th out there. Nice little Morningstar bullish reversal pattern. So that level of support held. So we've got the seventh inning stretch candle to the downside. That could be a significant low in trying to answer your question. If it's a top of any significant consequence, our next piece of information from the VIX index will come at the 50-day exponential moving average. You know, right now it's 1417. You and I, if we're short the market, I'm short the market right now, I actually don't want to see 1417 get hit today. I don't want to see the VIX index get up there. If it does, it'll say that the market will bounce. the next day. I'd rather just see it be like a gradual thing. But nonetheless, the 50-day exponential moving average is something that you and I would then, if this is going to be of any consequence, and we go back, for example, to May of 2011. In May of 2011, the VIX index started to get above the 50-day exponential moving average, and it really stayed above it. Got up, and that's really the line of demarcation for us as a guideline out here. Because when the VIX trades above that, then there is significant carnage that can happen inside the marketplace. So for me, that's another area to take a look at. And then it's just one last piece of information, and you can comment on what I've thrown out there, and this is going back to a question that Saratoga Bob asked inside the Tiger's Den this morning, which he was looking at a Bradley turn date that I believe is around May the 10th out here. Today's May 5th. From my standpoint, if I take a look at the historical average over the last 82 years out here, the market, this is the Dow, tops either yesterday, May 4th, and many folks will recall that I was talking for the market to move up into May 4th, and May 4th being a turn date. I've learned to take a look at these turn dates and whether they're at highs or lows, to almost use them more as turns. But I would say, in answer to Saratoga Bob and to listeners out there, that the Dow typically turns between either May 4th, this is using the trading calendar for 2015, or May 18th. So we're inside of a cycle period right now where there could be a turn that takes us into a low into the end of May out here. And so I say that you use this information and we look for things like you identified. You came up with the San Francisco. You came up with a 0.618 retracement. You came up with an island reversal on a 60-minute chart. I've thrown in there the summation index and the price oscillator. I've thrown in there the seventh wave pattern inside the VIX index, which is applying to the S&P 500, but nonetheless we can use it. So those are the things that I throw out there, and then the 50-day exponential moving average on the VIX and where price travels to. So those are my thoughts additional thoughts for you to consider.
Steve, I appreciate that discussion. I'll be watching closely with you price action and that McClellan oscillator indicator you use on that. I would merely, in signing off, just say the following. CNBC opening a studio in San Francisco on April 27th. In and of itself is meaningless. But gosh, I've been a market student of history for decades, and looking decades back in time from that point. And it is just too strange how from time to time important market turns manifest or occur coincident with crescendos in popular culture in some way, be it a cover on Barron's or Forbes magazine or perhaps a TV show or something. But I will tell you this, until the NASDAQ composite gets over 5132, I am assuming that's an important top. My market experience has taught me when obvious things like that occur, to work with those and act in such a way until the market itself proves something else. So
yeah, I guess
that's the tactic I'm taking.
No, and it's good. On the San Francisco office, I don't know much about. I'm aware. I've seen them. I saw them broadcasting last week, but I really didn't have the sound on, so I didn't really pay much attention as to what was out there. So I don't know how significant of an office it is. It could be more of a financial decision. And what they were paying, fees to folks to have their reporters, in California and being close to Silicon Valley and stuff. So I don't know how significant of an office that they actually have out there. Do you have more detail on what they've done, or?
Steve, no, I do not. And frankly, that development in and of itself, for me, is really not that important. It's merely a reflection, potentially, of a crescendo in enthusiasm. And in looking at the price action itself, is frankly what I'm paying attention to most significantly. So,
Yeah.
So Steve, thanks so much for going over that, and please, as we continue along, if we start to get further swings in the NASDAQ composite, I'd sure appreciate your sharing with us and the audience the clues that you receive and looking at price and the McClellan oscillator for that index. I'd be very grateful if you could do that.
Yeah. No problem. Happy to do that. There's one other thing that, and I can do this, and then I'm going to go off to Chicago with Robert and talk about Whole Foods. But there's one other thing that you and I can take a look at that because you talk about the, something like a San Francisco office being a crescendo of, some form of euphoria or something along those lines, just as some marker out there. You and I can also take a look at what goes on inside the S&P 500 by taking a look at the relationship between the consumer discretionary ETF and the staple and the consumer staples ETF, the XLY to the XLP. Everybody's going to go out there and buy ketchup, and staples that are needed. But when the consumer discretionary ETF is outperforming the consumer staples area, and just like on the VIX index, I take a look at the 50-day exponential moving average. The very bottom portion of my screen here is that ratio between those two ETFs and the 50-day exponential moving average applied to it. Now, this is not a tool that can be used to identify a turn. What it can be used for is an identification that the turn, like you've identified here, the 5 or 6 different elements, is turning into something more than just a buyable, pattern to the downside. And that is where this ratio starts to get below the 50-day exponential moving average. So far, the lows that have come in here recently, when we take a look at where the market has turned around, this is back in the early part of April to the move down April 17th, 18th. What we can see is that that ratio actually got right down and found support at that 50-day. So what we will see, if this is more of a top of significance, is we will see this ratio swing back below the 50-day exponential moving average. So that's a tool that I don't share too often. I don't know if I probably shared it 1 or 2 times here at TFNN. So that's another thing for us to look at. All right, my friend?
Steve, thanks so much for your time. Do appreciate it.
Yep, you bet. That was John in Philly. Hey, let's go out to Chicagoland. Let's go to Robert, who wants to take a look at Whole Foods Market. Robert, thanks for holding. I appreciate that. How are you doing this morning?
I'm very good. How are you?
Excellent. Excellent. Thanks for asking. Tell me what you're doing with Whole Foods and how I can help you.
Well, they report tomorrow after hours. After hours. And I just want your perspective on them.
Now, let's see. Here's my perspective, because you called about Whole Foods before, and the perspective I gave you, if you had ignored it and done the exact opposite, I think you would have made out like a bandit. So I'm going to see if I can give you that same kind. I'm going to see if I can give you that same kind of information.
Nah, that happened in October, I think, November, yeah.
Yeah, it did happen in November, because we were taking a look, and I think they were coming out with earnings, and we're trying to figure out what is it doing out here. But maybe there's some new things that are on this chart that I had ignored or something, not intentionally ignored in the past. But one of those things that we can take a look at, you and I can go back and look at last November. So when you called in, it might have even been November 5th, maybe the 4th, but it was right, I think it was before earnings. And so one tool that we can utilize that we probably didn't when we were looking at it last November was the TAS market profiles. And back then, price was above the TAS market profiles. And so that was an indication that the market, the bulls or the buyers were in control out there. And then it just simply gapped up. Today, what we can see here is that price has found resistance at that bottom of the box out there, the TAS market profile, the 48.67 level. And that's a pretty significant level of support to have been broken. And the reason I say that is I explode this up on my screen, you'll see that there's no point of control. There's no blue line in this current box that it's in. And that says that that point of control is really at the 48.67 mark. And that should have held as a pretty good area of support. So I will say, if there was a tool that we ignored last time that is present this time, last time it was giving us a bullish message. This time it's actually giving us a bearish message. Now, how bearish, what I don't know, because what really comes back in play, believe it or not, it takes us all the way back full circle to that November 6th timeframe where the market broke out. And so if the news to Whole Foods numbers are negative or whatever, it says that it ought to pull back to 40.64 or 43.37. My recollection is you're looking more from the bullish side on this stock than the bearish side. Is that correct? Because you're looking for more of an intermediate term type trade, or?
Yeah, I was going to dump some shares, but I held them. And going back to recently, I had them. I don't know why I didn't do this, but I was going to dump some shares around 57.40 rings a bell, and I'm going back probably, maybe 2 or 3 months, and I held up some shares. And so here I'm at the point where it's come down so dramatically here to 48. I'm thinking just move the rest of the shares out or hold them. So it's not a huge investment here. It's just a trade, and I was thinking about holding through earnings, but I don't have to.
Yeah, so I could give you the bullish, and so your instinct, I think, was dead on right in the 57 area. In the 57 area, you got a signal back on March, the week that began March 2nd, 2015, and that's when the top of the resistance level, its market profile, had formed out here, and so that was a possibility. So I think your instinct was right there, and happened to have been a piece of information that the TAS market profiles gave to us. Then when price pulled back, like if you were looking to add to the trade or something like that, price should have held on the weekly basis at 50.76, and it failed to hold that level. So even on a weekly basis, this is saying, it's not really the buyers that are in control. The problem with the weekly chart is, from a weekly perspective, it's come right back into where it last broke out back in November. It's really up at that high during that week, which is at 47.49, and is trading at 47.72. So I'm going to do my best to give you the best advice, and then you should probably take the opposite. We'll see if the opposite holds true on this one. Actually, I don't even know. I this one here, I can understand your uncertainty or about this trade, because the clearest message that we have from this trade is that sellers are in control at the moment. I mean, that's the clear message on the daily, on the weekly. Let me put the monthly chart up here for you, and let's just see what the monthly chart says. It may take a moment for the profiles to but here's another way to answer the question. If this thing gaps down or moves down into the 36 level, which could be really good support, how are you going to feel about the trade you're in?
Yeah, awful.
Awful. Okay, awful is not a good thing. If you were kind of like, hey, that's not a problem, I'm still in good shape, then because this would, I say, from a monthly standpoint, that it wouldn't be out of the question for 38.11 to get tagged, 42.18 to 38.11 to get tagged out here. So I don't have any clearer signal on this. Is there something else that you might be looking at that I have overlooked out here? Is there anything else? Because the other thing is that I will say in Whole Foods, Robert, is it had a sign of strength on April 24th. That should have been an indication of a sign of strength to start moving higher, and it didn't. It had good volume, 9.9 million shares. It just simply found resistance at that TAS market profile on the daily chart out here. So I don't know how the market's going to respond, but right now the signals are probably comes all the way back to that breakout area in at least the 40-ish range.
That's
okay?
Perfect. Yeah, that's wonderful. Thanks so much for the analysis, Steve.
You bet.
Appreciate it.
You
we'll
bet.
see how it goes tomorrow. Okay.
All righty. You bet. Have a great day. That was Robert in Chicago. We'll come back. We'll take a look at Whole Foods tomorrow after the earnings report, and we'll see if I gave him any good pieces of information or not. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 37, S&P's down 8, the NASDAQ Composite's off 47. So we had some interesting discussion, I think, when we took a look at the NASDAQ Composite. You know, the real important thing to do when each of us, when you and I are trading out there, depending on whatever the time frame horizon is that you're looking, is to first understand what type of market that you are in, because the trading tools and systems and time frames that you use are going to be impacted depending upon the trading conditions that you're in. You know, it's like, you know, going on a boat and knowing whether, you know, you're what the weather's going to be like. We're flying and knowing what the weather patterns are. And the stock market, our weather patterns are trying to understand, what type of market conditions. What you and I are in right now as far as the market conditions are the most difficult markets to really navigate. And we started really talking about this within the past couple of weeks, or I did, with regard to, hey, we're in these consolidation patterns out here. Clearly when we take a look at the NASDAQ, which we've been talking about, and the S&P, we're in this consolidation pattern. It's really been in it, since February here. Now, off of the January lows, the NASDAQ's up probably about 5% or so, somewhere in there. So it's been a pretty good move for a 4-month period of time, percentage-wise. You take that 4 months and you'd multiply it times 3 to get a calendar year and say it could be up 15% at the end of the year. You'd be pretty darn happy with that type of a return out there. But nonetheless, right now, the market conditions are consolidation. So one other element to add, I don't know if it's number 7 or number 8, to the different elements of was April 27th the top of any significance out here, you'd really see a break of this consolidation pattern and then 200 points to the bottom out there. I think you have to wait for the market to get down there. I believe that because we're in this consolidation, you have to look at those other intraday patterns and play those, whether it's a 30-minute chart or a 120-minute chart or 240, 300, whichever ones are providing you with the best signals that are out there. That's really what it is that you have to, to me, that is what it is that you have to go on. So know that you're in this type of consolidation market out here. If you're looking, if you've put money in your 401k as you filed your taxes, and it's just sitting in cash and you're trying to figure out what to do and you're only taking really long positions, then my recommendation is wait till we get a confirmed breakout, or wait till we see price move down to the bottom of the consolidation box inside the NQ and hold in that 42.70. That would be your best places to add to any kind of position out there. So I just want you to know that even though we're taking a look at some different tools and maybe what might happen in the future, what's most important about anything in life is always being present. That's why I'm always grateful for your presence here each and every morning out here. And the whole purpose of being present is simply when we're trading in the stock market, we also have to be present. We have to realize that you've seen this game before. You've been to this rodeo where in 1 or 2 days you've seen the market move lower. There's not too many people that were on the bearish side of the market when it was moving down into April 30th out here, or probably into April 17th when you had nice big down moves, and people just simply thought, man, this is great, because I've talked to some of you, on the telephone. Why didn't the market keep going lower out there? And when we went and we took a look at the 30-minute charts out there, what we saw was these reversal patterns. So this is nothing more than a market where I really like the expression that David White coined: sell when you have to. No, sell when you can, not when you have to out there. I mean, use that expression out there in your trading, and pay attention to those intraday patterns out here, because those are the ones that have been working the most consistently. So, folks, stay tuned. Our man Basil Chapman, he'll be up next, and then it is Tuesday, so we got the Options Hour, Daryl Martin, David White, the Tom O'Brien Show, and have a great Tuesday. Take care, folks.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
This is TFNN.